Hello, Mark Sturdy here with another thrilling episode or summary of our work this week in 7 days ahead on the major world markets, the major world liquid world markets. And if we look at the summary page, you'll see that we've pulled our horns in somewhat, that we retain bullishness of the dollar against the euro, although it's a slow burn. We remain bullish of the FTSE 100, bullish of the Nikkie 225. The leading market in the bull run right now is the Nikkie, and the FTSE is a lagging market, but nonetheless it is bullish, more bullish technically in a chart sense than the S&P 500 and the FTSE 50. You'll note that we have pulled back from our bearishness in the bonds, that some of the patterns that we saw on the point of already having completed broke down, the bearish patterns, and so we're pulling back. But we note, I think everyone should note, that the bear price terms, bullish yield terms in the medium and short term in the bonds and the gilts are still there, and we have pulled back from bearish any activity in the gilts and the oil, the gold and oil, and we'll come to those shortly. Let's look at the dollar euro as we usually do first of all, and you'll see that the breakout here is for a more bearish dollar against the euro. And even though the market's gone sideways for quite a long time, we note that any strengthening move on the dollar or the weakening of the euro once, twice, 3 times, 4 times, 5 times is coming up against enormous support, so that we still think the dollar goes weaker and the euro stronger. There is some short-term weakness in the euro, but we don't think it's very exciting and important. The rest of the currencies have been quite dull. It is worth looking at the dollar yen, because we remain bears of the yen, bulls of the dollar, due to this breaking out through this long-term prior high, the completion of continuation triangle here, driving the yen weaker. This same triangle here, which has completed, bounced off, but there's a dithering around the 158.87. We'd like to wait for that to be resolved before we go on selling the yen, buying the dollar. Stocks, well, the S&P 500 is fantastically bullish. The market is bouncing off prior highs wonderfully, and is on the cusp of breaking through into new territory. 78.40 is the critical thing. Once that's broken through, there'll be a fresh bull run if the market can get above and stay above that. The Euro Stoxx 50 is in a similar situation, waiting on the cusp of breaking up through 61.43. It's the weekly chart. But note well that the lead market in terms of this bounce is the Nikki, surely. We know the big picture long term is fantastically bullish. We know the big picture medium term remains bullish. The market bouncing off these prior highs once, twice, very well. And indeed, in the very short term, there's the bouncing off the... We've bounced off here, and we are already in virgin territory. The market's never been higher than the Nikki. Fantastically bullish market. And even though it's a laggard in terms of where it's got to, I like the structure, even though it's of this FTSE, because it's completed a small pattern here showing a desire to go up and hit, supported by a completed double bottom here. So counterintuitively, I'm bullish of FTSE as well in terms of clarity of structure. We have pulled back from bearishness in these bonds. Trading range, long, medium, short term, it broke down, is up. We thought this was bearish, and it could yet remain bearish insofar as the market broke beneath prior lows. It's bounced up and is testing the resistance here. Wait and watch to see if that fails there in the very short term. Even so, the T-notes are dull in the medium and long term insofar as they're in very big trading ranges. Not true of the German Bund. We think there's a breakout of a triangle here. Note that even though the market has pulled back, in the medium term it's still a breakout and is sitting on massive, these yields are sitting on massive support from prior highs, 288, 287. If the market pulled back to below 3, it's still got a lot of work to do to get beneath that. So the market is underpinned, even though yields are pulling back from their highest levels in the short term. This is the pullback from our high levels in price terms. The market broke down, we got very bearish short term. It couldn't sustain that breakdown, broke back up. Stand aside short term. Don't forget the long and medium term picture remains bearish for prices, bullish for yields. Same is true of the gilt. Here's the long and medium term. While the market remains beneath 89.23, it looks bearish according to this triangle with a lot to go. In the medium term, the market didn't actually break out and close above this triangle. This was a triangle in the offing and it didn't break above this diagonal. Note, however, the pullback certainly is quite sharp. It is on support 475, 492 from these prior high, band of prior highs. If the market can get beneath that, then we really would be sitting on our hands. Until it does, the medium and the long term are still bearish for prices, bullish for yields. Of course, this in the short term didn't come to fruition. There's the continuation head and shoulders that failed, briefly closing once beneath the neckline. And similarly, in yield terms, the mirror of that price H&S pattern collapsed back here. Don't be distracted, though, from the continued bearishness of the medium and the long term in the gilts. Oil, within a big trading range, lack of clarity. Gold, quite dull, once, twice, three times, reapproaching this big support, 43.98 in the July gold contract. Until it breaks that, nothing doing. It's sitting on major support, long-standing support from last September. Thank you.